creature, and its name is Marko.
Welcome back, everybody, to another Hoot Loot show, the place to be informed, be amused, but never be misled. And this is a Hoot Entertainment Markonomics 101 production. Today is the 16th of July, year 2022. Last show was about the Great Depression 2.0. What do we have to follow that up with? Well, a little bit different, because today we're going to talk about some short-term bright sides in the market. And today's show is called Revenge of the Stupid Stocks. It's all about how the dumbest of the stocks even have their day every so often, just like a broken clock is right twice a day, and a blind squirrel gets an acorn sometimes too. So occasionally you can be right investing in stupid stocks and cryptos. I think we're going to enter a very brief period of time like that. We're going to talk about it in a minute. But get ready for the fact zone, because you are in it right now. Same fact time, same fact channel. All you new subscribers, thank you very much. Welcome back to the show where the truth is the facts of the truth. We'll be right back with the charts in just a minute. Thank you. All right, welcome back. Well, before I forget, let me mention that behind me is Dumb and Dumber, because we are into stupid and stupider, and you're going to see some stupid stocks that are doing some stupid things, and it'll give all those stupid investors and stupid people a chance to brag how they were right all along. But anyway, we're going to go to the canaries in the coal mine here, and as we call them, the first one, of course, is the password formerly known as Bitcoin, which looks like it just may be in a sideways flag that we're gonna lean to the positive side here. So instead of thinking the world is going to collapse, it will eventually, just not tomorrow. But Bitcoin looks like, or the password formerly known as, looks like we might have a little near-term rally. There's some other indicators too. We're going to go through them, but there are definitely some signs of short-term hope here, albeit within the context of long-term. Yeah. All right, so let's go on to the next one. And this is, of course, what would stupid stocks be without the queen of stupid stocks, the poster girl of stupid stocks, Kathy, knock on wood, of ARK Investment. And, again, it hasn't quite broken out yet, but it's forming the kind of pattern, ARK is, that would lead me to believe that there's some upside ahead of it. And as we're gonna actually show you some individual charts of what we've called stupid stocks in the past, they look pretty good too, as do some of the NASDAQs. So there has been a cessation of selling, of declining pressure, and that's what you need. We mentioned that on the last couple of shows. You need the market to stop falling before it can turn and even go up a little bit. So it's starting to decelerate on the downside, and that's what we're going to show you a lot of evidence of today. No stupid stock. The Canary to Coal Mine Stupid Stock Survey would be complete without Michael Newentown Saylor's MicroStrategy. And again, it's still in what appears to be more of a neutral formation. But again, there are a lot of indications here that we're actually going to see a little bit of a bump up as opposed to a bump down. Partly because the sentiment is so bad. All of a sudden we're hearing about, crypto bankruptcies and all that. Well, duh, who told you about that about 6 months ago, that they were coming down the pike? And who's going to tell you right now there's going to be a lot more of them no matter what happens here. And what's going to happen here is going to look like, hey, they're back. We're vindicated. Nah. Okay, so, and then finally, the king, Elon the Felon Mesla's company, and this thing is in a massive bearish rounded top. Don't get this wrong here. This one has maybe a little bit of upside here if there's a stupid stock rally, who knows, but it is dramatically overvalued for the reasons we talked about 2 weeks ago on Elon's Mesla, where basically this thing has nowhere to go but down. Elon himself, just apparently there was a poll out of the publicity, an approval rating of Elon the Felon, and he's now got negative net approval. So believe it or not, the public is no longer swayed by the con man, by the P.T. Barnum of this millennium. All right, so we'll go on to the Dow Jones. And the Dow is, we've had a target of this for 28,000. It probably is not going to reach it. It's a lot of the indices that we're going to show you are actually have found support at a certain level, and that gives us more confidence to kind of take negative money off the table. You should not be short. You should not be long right now. Again, cash is king. Stay in cash, but there are some interesting opportunities here that are showing up on the long side of all places. So, and then eventually on the short side too. We'll talk about those. The NASDAQ 100, this one has been the leader on the downside, and it looks also, we've had a target of 9,500, maybe a little too bearish on this go around. I would say that there's a possibility it rallies all the way to, that support line of 13,000. Who knows? I don't think so. That sounds a little too much for me right now, based on everything. But right now, the path of least resistance appears to be up for most things. So we'll see. The S&P 500 also, looks like it may have found some support, may not have. We'll have to see, but I'm inclined to think yes. The small cap had a nice day, a nice week last week, came back, and it's kind of stair-stepped its way down. Again, it looks like there's some support in the area it is, so we'll keep an eye on that. Transportation, same thing. And we're starting to see actually some temporary signs in the economy that are really good too, believe it or not. So, all of a sudden, doom and gloom has gone to hopefully good, but hopefully good may be very short term. Now, this is one of the stupid stocks that is starting to show some life in it. Maybe one of those 27 carcinogenic chemicals that they put in this thing, finally brought it to life, like Frankenstein or, Jason in Friday the 13th, Jason Voorhees, where all of a sudden he gets an electronic shock to his head. And even though he's been hit by like 50 bullets, he's been run over by 20 cars, he still gets up. Where's my Jason mask anyway when you need it? Never mind. Anyway, so Beyond Meat. Look at that. It actually looks like a pretty good pattern. Now, it's a short-term pattern, but it is it's broken out of a descending wedge after a long period of time, and it probably has a little upside to it. I mean, one could actually speculate in this, and maybe it goes, a reasonable way. It could easily go to 50, 60 bucks without really interrupting the fact that, other than that, it's been slaughtered for about 2 years. Here's another one, DraftKings. This is the online gambling company, and this one will always be a stupid stock no matter what the price. However, it looks like a little bit of positive upside action in it, just a little bit of a breakthrough on Friday. And this thing, and the volume was good too last week. So, or actually, especially on Friday. So, you look at these things plus the volume, and it gives you the ability to start imagining that a positive sort of vibe is coming through the market, and that people who have been slaughtered in stupid stocks can suddenly find vindication in the fact that they were right all along. I can't wait to hear, if ARK does go up, I can't wait to hear what Knock on Wood has to say. Oh, I was vindicated all along. I knew my method would pay off. Same with New in Town Sailor. He knew it all along. But it'll give him a chance to be more complacent, just like Elon Musk. More complacent, more narcissistic, more self-involved, more overconfident, and more dead in the long run. And I meant that figuratively, of course. All right, so let's go to a Lucid Group. Lucid is one of the EV companies, making it practically a stupid stock because of the valuation and all the other things we've talked about EVs about in the last year, including things that are now just coming to light. Like the electric power grids can't take all the demand for electricity. Gee, who talked about that like 6 months ago before it became public knowledge? I don't know. There was a show I heard about where the guy actually talked about this, but, who knows. So anyway, Lucid also looks like it might be breaking out from an ascending wedge here. And, I don't know that it has a long way to go, but it could go, another 30, 50%. Looks kind of interesting. Wouldn't touch it necessarily unless it broke out and, you're a trader by nature and you like these things. Other than that, it's probably not worth it. Netflix, this was at one time in the mega caps, but it's no longer a mega cap. It's kind of smaller now that way. But even this one, Netflix has everything going on bad with it you could imagine. The news is bad. The subscribership information is bad, et cetera, et cetera, et cetera. But it looks like it's breaking out. So when all the news is bad, and they're going to report earnings in the next week, they probably built in the worst possible earnings report scenario. That's how you're going to know. A lot of these companies are reporting earnings coming up from Monday through the next week, including Misled on the 20th. And all of those and how the market reacts to those is more important than anything else. They may be terrible, but the fact of the matter is that even if they're terrible, if the market already built it in, they'll go up on that news. Just like you can have a great earnings report, it's already been built in, so the stock goes down. Same kind of thing is going to happen on the way up, so keep that in mind. Roku was a stupid stock by virtue of valuation. It probably isn't that bad right now. It's a real business. I haven't really done a lot of valuation work on it, but I know Netflix is thinking of, or they've been rumored to be combining or wanting to combine with Roku. That might be a good move. That might actually create a company that is a non-stupid stock, period. We can just take it out of the stupid stock category. Kathy, go find other stupid stocks to replace them, please. Thank you. All right. Well, this one is a blank graph, but this one is Bitcoin 5 years. And the reason I put this in is because just to give you a big picture look. And basically what you see there in the right-hand corner is a little bit of a congestion. And that's what makes me think that this thing is going more than likely to break up because it's gone down so many times. It needs to surprise people a little bit right now. And that would be a big surprise. Ethereum, here's one, and here's where we're starting to get to some more interesting data. Ethereum had an outside week bullish reversal last week. That means that its highs exceeded last week's highs, but it opened at a lower low, closed at a higher high, like a slingshot. It went like that, and that's usually a good, at least short-term sign. Probably will rally back up to that 1750 level that was previously support, now resistance. So that gives, that creates a little bit of a trading opportunity. Everybody get all bulled up, all whooped up about how cryptos are the end of the world. They're the best thing since sliced bread. And Matt Damon, you can now take your head out of the bunker, and you can now tell people the future is for the brave. All you crypto shills can come out of your little caves. And by the way, has anybody noticed LeBron James looks like he's Amish? It's number one that you have a billionaire shilling crypto, being proud of himself about it, taking money away from the little man. But then why on earth do you look so damn Amish? I don't know. It's a very mystery to me. I'm going to move on. Okay. Coinbase is another company that I don't know if it's going to last, but for now it will. And this too is in a relatively bullish pattern with relatively bearish fundamentals, but you'll notice even the volume started to pick up on Friday. So there is some sponsorship of these types of companies. There will come to be the belief, and it'll be embraced by the crypto zombies, the crypto cabal, that that they were vindicated. This is just another shakeout crypto winter, blah, 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 blah. It's still a password. No matter what you say, it's still a password. Bitcoin's a password, a password, a password, a password. A password. Until you get that through your heads, you are doomed by cryptos. All right, let's go on. So Galaxy Digital Holdings is one of those trading platforms that I've railed against for weeks and weeks and weeks and weeks. 3 of them have gone bankrupt, and there are 3 bankruptcies in the last week. One of them called Voyager, which was a trading platform. And this is where people are making all their money in crypto. I can get my money back any minute. Well, unfortunately, that has not proven to be the case. A lot of these trading platforms have suddenly halted withdrawals. Yeah, you can't get your money back anymore. Like I said, if it's offshore, it's not regulated, and you better be very careful that when you claim you get your money back. Oh, and also, your family and friends that you brought into this mess, I'd come up with a good excuse on how you're going to explain that to them. Okay, the U.S. dollar index, this is probably one of the more interesting developments that we have right now. It's breaking out to new highs. It is actually at what they call parity with the euro. The euro was invented about 20 years ago, and they were trading about 1 to 1. So 1 euro equaled $1. They're about at that now. The dollar index has had the most incredible rally, and it's a mixed bag. Now, we've talked about the Great Depression 2.0, and here's one of the places where no one talks about the dollar rally and what it's doing. Okay, we're now having trade deficits that are about $100 billion a month negative. That means that GDP is being softened or being hurt, mitigated, being reduced by 1.2 to 1.5 trillion per year. Okay, now that relative to GDP is something like 5%. So you're 5% in the hole, 1% every quarter, just because you can't produce the goods. And our goods keep getting more expensive overseas. That's the dollar going up. And imports keep getting cheaper. We just can't get any because we have such a problem with our logistics. But the dollar index is going to do something else too, which is interesting. This kind of move means that international companies who earn a lot of their income in foreign currencies, once they translate them back into U.S. dollars, are not going to have as favorable of a translation. In other words, right now, dollar for dollar, you basically just had a 15% drop in the value of your foreign operations in about the last year. So that just doesn't work well, to a global economy right now. And it's certainly causing some problems here. We'll have to watch it, but I mean, it is just soaring up. It looks like a flight to safety. There's something fundamental about it. Not quite sure yet, so we'll have to keep checking. We've talked about inflation cresting. Yes, it has crested. We have more and more evidence of it. Here's a little bit right here, the CRB index of commodities, and it continues to go down. We've talked about food having peaked. It has. Energy having peaked. It looks like it. And pretty much the inflation scare, though it's running through the system, is petering itself out. The problem is, to do that, in order to engineer that, they had to really whack the economy. So we'll be talking more about that too. Here are food prices right here. The Invesco Agriculture Index. This thing got way bid up there, and it's just come down in chunks. One of the things we heard, corn prices. This is again so important to have corn. Corn's everywhere. It's in everything. Even in corn on the cob, apparently has still real corn in it, from what I understand. But it's completed a rounded top. It's gone way down. It's at a big gap lower. That shows you a drop in expectations or a drop in demand that was sudden and violent. That doesn't happen at the end of a market. It happens at the beginning, and that's why while we've told you there's a little bit of sign of optimism in the air. Woohoo! Yay! Well, there's not that much. Something to get happy about for the weekend. That's about it. All right. So with soybeans, same kind of thing. Look at that, just gap down. That is not good when you have discontinuous trading like this, and all of a sudden one day it's at 1,700, the next day it's at 1,250. Without any stops along the way. The express elevator down and no stops. That's not a good sign. And soybeans, important crop, not going anywhere. And here's one that you thought you're never going to see bread again, or wheat or anything. You have to make your own bread, grow your own wheat. No, doesn't look like it, even though something like 1/3 of the export capacity is taken offline. I'm not exactly sure how this is being met up, but I will tell you this. The markets have a tendency to overcompensate on the upside. It looks like they have. And the availability and substitutability of wheat is a lot better than people thought. And, we may lose a crop or two, or may have a shortage of a crop or two, but to have a worldwide food shortage with all crops being all of a sudden, non-existent, supermarket stores being bare, was never really likely. It was likely to be thin, like during wartime when they had ration coupons and stuff, but not that much. So, and then base metals, again, another sign that the economy is not healthy, even despite the signs we're going to show you today. We've shown you some. We're going to show you some more. But this shows you not quite yet. Freeport McMoran, copper, not looking so good. Both precious metals, industrial metals are not looking good. It is not showing the kind of thorough economic rebound that one would want. And that's why I think this is just nothing but a bounce that we're going through. Crude oil, also, it dipped below what was an amazing level at 92. And crude oil, it appears demand destruction is here at last. In other words, there is a conscious level to not consume this because it's so damn expensive. And, there's much more of an incentive now to look for substitutions, public transportation, walking, not going out, burning logs in the fireplace instead of Now, the big oil index we talked about, I think it was last show, that it had a huge, what's called an outside month reversal. So you look at that, it went from 1,900, this index, to 1,400 in like a month, which was higher than the previous high in the opening, lower than the previous month's low, reversed the whole thing out, acted like a slingshot, and the first thing Monday morning, oil was down another 10%. It's bouncing around a little bit, but I don't get this feeling that this is a secular up move in oil demand or anything like that. We'll see. But it came snapping back in a hurry, and it really hasn't been outside of this range for a long, long time. And here's another sign of it: oil drillers. If oil were really in a long-term type of uptrend that could be capitalized, who could better capitalize on it than people that drill for oil, right? Well, they're not, and apparently the stocks aren't doing well. They're not drilling as much, and you can thank our wonderful administration, vote out all the incumbents and their stupid energy policies. The policy that punishes you for producing. The policy that punishes you for being successful. You're bad if you're successful. So vote out all the incumbents, make America laugh again. That's the answer to our problems right there. It's so easy. And we will have these beautiful shirts. We're just coming out with them right now. And we're going to have them. You can be part of the vote out the incumbents movement. We're going to get rid of these bums. And the only party any of us is ever going to need is the party that we're all going to throw when we throw the damn bums out. Woohoo! All right, let's keep going. Gasoline. Now, this is interesting because now gasoline has also taken a big move down to approximately support. Another reason why I think demand destruction is going on, and it's gone almost down 33% in a matter of a few weeks. So boy, do fortunes change in a hurry. Got to keep up with the markets. Now, this is the this is the natural gas fund, the 2 times leverage called ProShares Ultra Natural Gas. And you can see that natural gas has come in quite a bit, and it has rallied a little bit toward the end here. Everything bounced a little bit. The question is, do they bounce because they're going into new uptrends, or they bounce because they're just bouncing? And for the most part, bouncing. Cotton, this one had an outside week, so I put that in. But look at that move in cotton. I mean, cotton, again, lost about 40% in several weeks. That's in all your clothes. That's in Mr. Pillow's pillows. He must have been really upset about it because that Giza cotton of his, he probably has all these inventories of Giza cotton for Mr. Pillow sheets. So, he's going to have to deal with that. All right, now gold is another thing that concerns me quite a bit. And there's another thing about this market that is really eerie, and that's the lack of performance by precious metals, especially gold. I mean, right now, its last support level is at 1,680. If it breaks that, look for 1,300 gold, maybe 1,350 gold. And if you do see that at some point in the context of deflation and depression, it's going to be very tempting to buy that, especially with a reset coming up and the fact that the fundamentals here do not suggest gold should be going lower. They suggest it should be going higher. Same with silver. And silver looks like crap too. So, this just tells you about the deflationary forces that are there, that are present, that are blowing stronger all the time. I'll huff, I'll puff, and I'll blow your house down. All right. Excuse me for that. Okay. Gold bugs index. These are the drillers. I mean, these are basically the miners that mine for, and then they look like terrible too. I mean, these companies, should benefit from the price of higher gold. They're not, because the price of gold is not going higher, and they're scraping by. Now, finally, is inflation here. Final comment. These are the TIPS, or the Treasury Inflation Protected Securities. These go up and down with investor expectations from the CPI. So this week we had a CPI that was 9.1% year over year, and a record high producer price index, which is commodities, of about 11%, year over year. So those two were terrible news. Okay, terrible news, and yet these didn't rally. In other words, they didn't take that obvious sign of inflation and rally on it, which they should have. The fact that they didn't says something. It speaks volumes, as a matter of fact. And here are the Treasury Inflation Protected Securities. These are the most of a bellwether, and they continue to be going down. So even when inflation looks like it's just roaring and cooking and everything else, it's not, or at least not according to these guys. And that's even making it very interesting, because 5-year U.S. Treasury yields, the Fed is raising rates in a hurry, and these are not going up in a hurry. These have stopped going up. And as a matter of fact, they're in a head and shoulders. They look like interest rates are coming down. That's another sign of deflation or depression for the economy. It's a good sign for most things, but it's not a good sign in general. And if they don't hold that blue line right there, they might go down for a little bit. And we might have a very, very, again, this is signaling low demand, a bad economy. All right, same with 10-year yields, a little bit more advanced. And here again, it's the dotted red line that they have to break to be in at least an intermediate downtrend. I don't know that long term they're going down to new lows, but at least for the time being they look like they are, until some of this gets through the economy. The other thing I should mention here is that the 2-year yield and the 10-year yield are considered a a bellwether of the yield curve spread. In other words, if twos right now are yielding about 305, 10s are yielding about 290. So that's about a 15 or 20 basis point negative spread from 2 to 10. That has almost always signaled a recession at the very least. We'll have more on that next week, because that is an indicator that is being kind of paid attention to, kind of not, but it's really important, and it continues to confirm what else we've been saying. I mean, I know it sounds like we're talking bullish here, bearish here, but we're really not. We're talking a little bit of bullish here within a broader context of bearish, and that's what we're talking about. All right, so here with the 30s now, same kind of pattern. It looks like it's going to break down even faster. And remember, 30-year, the longer out you are, the more of a sign of inflation and growth this is, as opposed to anything else. So this one is breaking down faster than some of the short-term ones, and that's just not good. This is going to have an implication as to what Fed policy is going to be. I think the Fed is not necessarily going to raise rates as much as is now believed, but we'll talk about that more. I think the Fed might have to pivot sooner. We'll see about that. But this is suggestive that maybe they've done almost enough, and they're going to pivot back a little bit. Now, we're going to go through some of the mega caps because they, too, are showing that stupid stocks, the revenge of the stupid stocks may be upon us here. These aren't necessarily stupid stocks. Apple is absolutely not. But it's actually behaved pretty well. Looks like it's in a kind of a head and shoulders now. But it could easily, if it breaks above that green line or around 150, Apple could potentially challenge its highs. Don't know, but you need a company like Apple to be participating in whatever direction you go because it's the largest cap company there is. End of story. Alphabet, too. Now, you look at that could break either way. So I didn't put anything on it. It's, I think it could break up, it could break down. Alphabet has continued to actually do pretty well in this environment, considering, especially if interest rates go down. That's the other thing. If interest rates come down, you're going to have much better valuation for stupid stocks and long-duration tech stocks because they're more interest rate sensitive than other stocks are. That's another reason why the market may be having a bounce here. It's in conjunction with lower rates and then high duration or long duration securities like these tech stocks. And Amazon is another example right there. It looks like it's found supported about 100, sort of bouncing off of it. And it could have a little bit of a rally here. Could. We'll see. All right. Meta Platforms, same thing, although it's in a bull flag. This one's likely to rally at some point. And I won't say anything much more about it at this point. Microsoft, I'm not sure what to make of this. This is just where we were last week. I honestly don't know. Earnings will be out. The interesting thing is everything gets thrown out the window depending on how companies react to earnings. And NVIDIA, here's one of my favorite. We just find out today that fancy Nancy Pelosi urges support for the $50 billion chip support bill that is going through Congress hours after disclosing a personal stake in NVIDIA of $8 million. How does someone get $8 million to gamble in options, which is what she's doing? This isn't even stock, this is options. $8 million. She's grown, her net worth is now $300 million plus, thanks to you. She's basically sucked it right out of you, and every other taxpayer thumbed their nose at us, and she goes and does whatever the hell she wants to do. There's even a site now, and I'll put the URL below, or the URL is below right now. That's if you go to that tracker, you can actually find out what Nancy Pelosi and other members of Congress are investing in real time so you can track them and work off of their inside information. And I am sickened by even having to talk about this. Okay, vote out all the incumbents. Nancy Pelosi is the worst example of incumbent there is. Complete tyrannical. Ugh. All right, Costco. Here's another sign that the economy is in for a little bump. I'm very, very perplexed as to why Costco all of a sudden became so in such a sharp move, but it has. We have to accept that. That means that maybe the retail index. God, I got tongue-tied there. The retail index, is actually doing pretty well, and a lot of the companies have been massacred. Here's one: Home Depot. Home Depot's broken out of a declining, descending wedge. And this thing's been in home building, which has not been good. It's been in retail, which has not been good. And all of a sudden, it starts looking pretty good. So there's another example. Walmart, again, broke down, starting to come back. Another example of retail getting a little bit of an edge to it. Transportation, important. FedEx may be breaking out of a descending wedge. This is a really important company because they transport all the goods around, and as is UPS. And UPS is still holding up there relatively okay, too. So, the bank index, this is another sign of, again, possible resurgence in the market temporarily. This had another outside week reversal on the bank index. And so while banks initially reported earnings much lower, the banks that reported earnings toward the end of the week ended up reporting, ones the market liked, even though the banks should be making less money because the yield curves are inverting. They lend at the short end. That's their cost. The Fed, no one can borrow from the Fed except banks. They borrow at the Fed funds rate. They lend at the long rate. So if the long rate's not much higher than the Fed funds rate, they don't make a lot of money. They don't make any money at all, from doing that. So it's not good for them. But here we see the market and the charts telling us to ignore that. That's yesterday's news, and this is today's news. The REIT index we put in here because we've talked about real estate and what it indicates itself. I'm going to still think that real estate has peaked. I'm going to still make that statement, but we may be in for a little bit of a again, some kind of liquidity bounce. The home builders ETF, and this is the last chart, this one is in a steep downtrend. It's kind of gone back up to its trend line. And again, if you look at the volume on Friday, it started to show positive breakout. So part of it is that there's new buy interest, new positive volume, and the other is, just the fact that it's been 6 long months of being slaughtered. So, I think investors are, their stupidness is, needs a little bit of a stroking and all that kind of stuff. And with that, I want to say thank you very much for tuning in. Hope you've enjoyed our shows, and please like and subscribe if you would. Challenge me, leave me comments, tell me I'm full of it. I don't care. Just watch, learn, and we love you to death, and we'll see you next time.